Welcome everyone to Eiffer's new reporting officials training for counties, September 2020, presented by the Employer Relations Bureau. My name is Fresco Bacam. I'm a Senior Retirement Compliance Officer. I'll be hosting along with Danielle Huffine, who is also a Senior Retirement Compliance Officer. On the agenda, I'm going to hand it over to Danielle Huffine. She'll go over the Employer Handbook. As a new reporting official, this will be your go-to resource that will answer most of your questions. The information contained in this handbook will help you stay in compliance with Eiffer's laws. This section should take up the majority of the training. So first, while we're on the main page here, I'm going to show you guys where the forms are at. It's down here at the bottom underneath employers. Go and just click on that and go in there. And a lot of the forms you'll use on a regular basis will be in here as a new reporting official. So for counties, you're going to be using the election for termination of Eiffer's coverage. Your township clerks, they're considered part-time elected officials. They do have the option to opt out. So, if you hire somebody new, a new clerk, make sure you give them this form. Technically, they should sign it within 60 days of taking that position. And a few more things we'll get into later, but I just wanted to show you this page. Another form you'll use often is the employer account / reporting official demographics form. If you hire somebody that you want to put down as a contact, or you want to give them access to the IQ system, fill that out. You can email it to us, and we'll get them in there for you. All right, let me go back to eifers.org. Okay. So the Employer Handbook, I'm going to bring that up for you here. Again, it's under Employers. Just go ahead and click on it. Go ahead and increase this a little bit. I'm going to show you how to navigate really quick, and then I'm going to hand this over to Danielle. So when you bring this up, you can also request a paper copy of this Employer Handbook if you want, but personally I find it easier to find the information I need. If you just bring it up on your computer, you can simply hit Control F, which is find on your computer, and as you can see up here in the upper right hand corner, it pops up, and you can type in, let's say, independent contractors. And as you can see, it brings you to that word right away. So you might have to the arrow a few times up here to get to the section that you want, but it takes you there right away. So it's very easy to navigate and find what you want, because having a big handbook like this can be a bit intimidating sometimes. So that makes it a lot easier. So with that said, I'm going to go ahead and hand you over to Danielle.
Good afternoon. This is Danielle. And so like Frisco said, we're going to go through the handbook. We're going to go through each section, and then at the end of each section, we will take questions and answers. So starting in section 1, page 7, what is Eiffer's? So Eiffer's was established in 1953 to attract and retain good employees in the public employment system. Prior to 1953, our retirement system was called the Iowa Old Age and Survivors Disability Insurance, or IOA-SDI. That was prior to signing the Section 218 agreement in 1953. If you were covered by our retirement system before 1953, you could not be covered for Social Security. IOA-SDI was stopped in June of 1953, and Eiffer's was created on July 4th of 1953. The Section 218 agreement with Social Security was then signed on July 1st of 1953, so 3 days prior to Eiffer's. In the beginning, Eiffer's was meant to be a supplemental retirement benefit to Social Security benefits. As the years have progressed and the Eiffer's plan has evolved, Social Security benefits are now supplemental to Eiffer's retirement, along with your personal savings. Eiffer's is the largest retirement system in Iowa. Eiffer's is a defined benefit plan under Internal Revenue Code 401A. It is a lifetime monthly benefit, and benefits are meant to grow with your length of employment. Benefits are calculated by a formula, which includes your age at retirement, and you must be at least 55 years old to start an Eiffer's benefit. A benefit multiplier, which is based on years of service, with 2% given for each year of service. 30 years would equal 60%. You can also receive an additional 1% each year up to 35 years, or 65%. For regular occupations, the average of your highest 5 years of service, regardless of when you earned them, so that does not necessarily mean that it's your last 5 years. It's just any time that you earn that during your whole career. Special service members and sheriffs and deputies The average is still based on the highest 3 years of service. There are 3 rules that each employee is striving to get to. The rule of 88, which is the member's whole age plus whole years of service equal 88. The rule 62-20, which is age 62 with 20 or more years of service. Or age 65, which is normal retirement age. All 3 of these rules get rid of age reduction, but the only way to get 60% of your high 5 average is to have 30 years of service. For example, if a member were age 62 with 25 years of service, the member would not have any age reduction, but they would only get 50% of the high 5 average. This is when a member can buy years of service to increase the number of years in the calculation to add to the percentage multiplier a member would currently be getting. Eiffer has a booklet called Purchasing Service that explains all the options of buying at retirement. You must file your retirement application before you can get an accurate cost for buying years of service. This can be expensive for some people, but it's worth it for most. You can get a guesstimate cost before retirement age so that you can plan for expenses later. Again, Eiffer is a lifetime monthly benefit, which means no matter how long you live into retirement, benefits are always paid to the member. Once a member starts receiving retirement benefits, most members will recover their investment, which is contributions plus interest, within the first 3 years of retirement. Eiffer also has a disability provision, so if you were to become disabled and are receiving or have been approved for Social Security disability benefits, you may start benefits earlier than age 55. It also provides death benefits if the member dies before receiving a monthly benefit. And depending on the option a retiree may choose, there may be additional monies paid to a beneficiary upon the member's death. Eiffer sets the contribution rates based on an annual valuation by our actuary. The annual valuation takes place in October and is based on many factors, including how many members have retired in the past year, investment returns, age of current membership, and who could potentially retire within the next year. The rates cannot increase or decrease more than 1% for regular class membership. Once this determination is made, Eiffer will send a bulletin, usually in December, to all employers. So you will have plenty of time for budgeting the next year's finances. We also list these rates in our quarterly newsletter, which is the latest word, and on our website on the homepage towards the bottom of the page. On page 8, there is a list of all of our resources on where you should go for help, which includes the Employer Handbook, and the Employer Handbook was just updated last month. The IQ Help Guide, it was updated at the end of 2019. Latest words, bulletins, our Eiffer's website, or you can call us at the help desk at 877-473-7799. Does anybody have any questions on Eiffer's itself and how benefits are calculated? So we have one question, and what happens if your beneficiary dies before you do? So that depends on whether you have started receiving benefits or not. So if you have not started receiving benefits, then you want to make sure that you change your beneficiary by updating the beneficiary form. You can either do this through My Account, or you can print off a form from our website under Member Forms, and you can fill that out that way. If you are already receiving a monthly benefit, then it depends on the option you have chose. So if you chose anything but options 4 or 6, you could change your beneficiary by filling out that new beneficiary form. If you have chose option 4 or 6, then unfortunately, there is nobody else that you can list as your beneficiary, and you would continue to receive your benefit for the rest of your life. So now we're going to move on to section 2. So section 2, page 9, Eiffer's reporting officials. Eiffer's requires that each entity indicate one person as the reporting official. The reporting official is the liaison between the employer, employees, and Eiffer. The reporting official is the person we contact if there are any questions, and the person we normally schedule a compliance review with. Eiffer counts on you to report wages correctly, pay contributions in a timely manner, and maintain employee records such as addresses, start dates, termination dates, and when the employee receives their last check with Eiffer's deductions. Otherwise, accurate calculations of retirement benefits cannot happen. We also send a member annual statement to our members every year, and if addresses are not accurate, these statements never reach the intended individual. Eiffer's employers have a 5-digit ID associated with each account, and this number should always be the beginning of your employer login. Your employer login also includes the first initial of your first name and up to 6 letters of your last name. If your current login does not reflect this format, or you are using the previous reporting official's login, you need to complete the employer account/reporting official demographics form found on our main website under employer forms and send it to Eiffer for an updated username. You also need to include on this form any other staff member that you want to have access to IQ and reporting wages. These people will be the only ones allowed to complete and sign necessary documentation for retirement, process refunds, and wage adjustments. Pages 9 through 13 list additional responsibilities of the reporting official, which include preparation of W-2s for all employees who are paid, and provide a copy of the form to your employees for tax purposes. This also includes township trustees and clerks. It does not matter whether they have Eiffer's coverage or not. Box 13, retirement plan box should be marked so that the IRS knows the employee is participating in a qualified retirement plan. You may report the members portion of Eiffer's in box 14, but this is optional and not required. Maintaining accurate data such as social security numbers, dates of birth, gender, employment history. This ensures the member's wages get applied to the correct person and the member receives the benefit they are entitled to. Eiffer runs a weekly report for anyone reported under 2 different social security numbers. We will contact you if we discover your employee shows up on that list. Documentation of leave of absences without pay, including FMLA and military time, should be kept. Employees can receive free credit based on these 2 leaves, so documentation is crucial for verification of the time of leave. With FMLA, the member may receive 1 free credit of service, but any additional time will need to be purchased. Employees that leave and go into active duty must return to Eiffer's covered employment within 12 months from their discharge date from the service. Employees that get free military credit do not have to pay any contributions if they are going to retire from their Eiffer's covered employer. This is because benefits are based on their wages and not contributions. If, however, the member is going to terminate and take a refund, or they want to maximize their death benefit, they can make payment of contributions. But if they do, then the employer has to as well. You may report member deaths by using the Report a Member's Death form on the main website under the Members tab. We will need the member's name, social security number, date of death, and the name, address, phone number of the family member or other contact person so we can send them information regarding the member. We also ask that you manage optional coverage correction form or election forms. Certain employees have 60 days from date of hire to make this decision and to fill out the form if they do not want Eiffer's coverage. It is your responsibility to let these employees know that their Eiffer's coverage is optional and provide them with the appropriate forms to opt out. The election for termination of Eiffer's coverage form is found on the Eiffer's website under Employer Forms. Once completed, you should keep a copy for your records and mail the original form to Eiffer's. There is a chart on pages 14 through 16 similar to frequently asked questions for what to do when and what to think about and do. Are there any questions based on Section 2? We currently have no questions for Section 2, so moving on to Section 3. Starting on page 17 is Eiffer's membership. Eiffer's coverage is mandatory for all permanent employees regardless of whether they are full-time or part-time. The determination of whether an employee is permanent is based on the intent when hired and is not necessarily how many hours are worked in a week, but determined by the length of service. Coverage for a permanent employee, whether full-time or part-time, should begin from day 1. If the intention is for the employee to be a long-term employee or more than 6 months. A temporary employee is more seasonal or on-call as needed. Temporary employees can be PRNs, secondary roads, parks, and recreation. If you have a person that works 5 hours a week but is working every week for the next 10 years, that person is a permanent employee and should be covered from day 1. A temporary employee is someone that may work May through September, or they may only work a few hours this week and not again for another 2 months. Temporary employees can be covered from day 1, or you can make them go through the qualifying period for coverage. But whatever you do, you must be consistent and treat everyone the same. You cannot pick and choose who is covered from day 1 and who must qualify. To qualify as a temporary employee, an employee must receive $1,000 or more in each of 2 consecutive quarters. Once the qualification is met, the employee is covered and the next quarter wages are received. A temporary employee is covered even if the wages now received are less than $1,000. And they are covered unless there is a termination by either the employer or the employee, or if there is a break in service in which the employee performs no services for a period of 4 consecutive quarters or more. There is an exception to the temporary rule, and that is high school students. Eiffer does not have a minimum or a maximum age, just the high school qualification that exempts them from coverage until they graduate. Once graduate, either their qualification period would start or their coverage would start based on how they were hired. Boards and commission members are dependent upon how they are hired and paid. If the person is salaried, they are covered for Eiffer, but if they are only paid a per diem, then they have no coverage. Township trustees are specifically treated like board members in determining coverage. If they are elected part-time and receive a salary, they have optional coverage, just like your township clerks. Part-time elected officials include your township clerks and possibly the township trustees, depending on how they are paid. Township clerks have 60 days from taking office to determine if they want Eiffer coverage or Social Security coverage. If they do not want Eiffer coverage, they need to complete the election for termination of Eiffer coverage form, and the completed form needs to be sent to Eiffer. If they do want Eiffer, they will need to be added to your wage report under the Occupation Code 17. Based on Eiffer Section 218 agreement, they are the only employees that can choose one or the other, but they cannot have both. Regardless of their decision, Medicare, state and federal income tax should be withheld. Once the 60 days is up, their decision is irrevocable. If they are elected to numerous terms, they only have to complete the initial form once. If there is a break in service, they would then have the option again. And as I've stated before, township clerks and trustees should have a W-2 issued at the end of the year and not a 1099. They are considered employees even though they have been elected to office. And if they do not complete that form to opt out within 60 days, the coverage for Eiffer is then mandatory. Board of Supervisors are normally considered full-time and do not have a choice to opt out of Eiffer. Only Board of Supervisors that are considered part-time and treated as part-time have the option to opt out of Eiffer. Regardless of which they are treated, they always have Social Security coverage and are not excluded from the Section 218 agreement like township clerks. Sheriff and deputies should be reported under the Occupation Code of an 03 and have sheriff contribution rates withheld. You may hire a deputy and use the 03 rate even if they have not went through the academy. They have 1 year to become certified. If not certified within that year, wage adjustments will need to be completed to move all wages back to the Occupation Code 01. Jailers are under the Occupation Code 21 and have the protection rates withheld. Just like with the deputies, they have 1 year to become certified, or wage adjustments need to be done to change the occupation code from 21 to 01. If you have dispatchers that are also certified to be jailers and doing jailer work, those dispatchers should also be coded as Occupation Code 21. Conservation officers are under the Occupation Code 18 with protection rates withheld as well. On page 22, there is a list of exclusions from Eiffer, which includes reserve peace officers. So reserve peace officers, regardless of how much they earn, they are always excluded from Eiffer coverage. Reserve officers cannot be treated as temporary officers and qualify for coverage. High school students until they graduate, election workers hired for election purposes only, part-time county medical examiners, board members if paid a per diem, doctors and interns of a state or local hospital, and volunteers. Another exclusion is independent contractors. Independent contractors can be businesses or individuals, and occasionally we may question an employer's decision to designate a worker as an employee or an independent contractor. This normally comes up during a compliance review or at the request of the worker. In this situation, Eiffer will determine if a person is an employee or an independent contractor for you. If you complete the worker status determination form found on our website under employer forms, along with the contract signed by both parties and send to Eiffer, we will give you a formal determination in writing. Our form is similar to the IRS form SS8, which they use to determine independent contractor status. We also use the same rules as IRS that follows behavior control, financial control, and the type of relationship between the entity and the member. The biggest factors we look at is the person operating under a business name or their own name? Do they hire and fire their own employees? Do they offer their services to others, use their own tools, and carry their own liability insurance? A person cannot be an independent contractor if they are under substantial control by the organization, or if they do not promote their services, or if they are a public official. If you disagree with our determination, you may send the SS8 form to IRS for a determination. We will use the IRS determination as our determination, but this can take up to 6 months. So in the meantime, they will need to be covered for Eifers if we've determined that they are a member. For termination of employment, Eifers assumes a member is employed continuously unless specific action or documentation shows a bona fide termination with the employer. Eifers deems documentation of a formal termination to include a resignation letter from the employee, a letter of dismissal by the employer, advertisement for the position by the employer, a new application must be completed, and/or 4 consecutive quarters with no services are performed. If an employee is not retirement age, they can leave their money in Eifers and take it out at a later date, or they can apply for a refund. Refunds can be paid as a lump sum minus taxes, and the member is subject to a 10% penalty if under age 59 and a half when they do their taxes, or they can roll it over into another qualified plan. If they are going to another Eifers covered position, the new wages will add to their current wages based on the employee's Social Security number. If they are retirement age, they can apply for monthly benefits. A member who retires and wants to return to work with an Eifers covered employer must complete a bona fide retirement period. That period is normally 4 months. Eifers determines when a person is eligible for retirement benefits based on their last day of employment. For example, if a member terminates in December, their first month of entitlement is January. That's the first month that they can receive a retirement benefits check from us. And that check is always payable on the last day of the month. So during that first month of entitlement and prior, they cannot enter into any agreements to return to work, either verbal or written, and they cannot volunteer their services. They really can't do anything. Once they have received their first benefits check, the next month they could return as a temporary employee if that employer makes their temps qualify for coverage. Or they could start negotiating to come back after the remainder of the 4 months is up. If the employer covers all employees from day 1, they must not return to employment until the remainder of the 4-month bona fide period is over, or they have received 4 benefits checks from Eifers. Returning to Eifers covered employment before the bona fide period has been met could result in the repayment of benefits by the member. If a member returns to Eifers covered employment and they are under age 65, the member is under an earnings limit of $30,000 per calendar year. This includes gross wages, cash in lieu of insurance, monies paid to deferred comp plan on behalf of the member, allowances, and bonuses. This means if they were to exceed that wage limit, they can either stop their retirement benefit for the rest of the calendar year, or they can pay back 50 cents for every dollar they go over the $30,000 limit. Eifers sends letters to members that have exceeded the wage limit in February following the year the member exceeded the limit. Eifers also sends out notifications to employers for a verification of the wages paid to the member for the previous calendar year. If a member is over age 65, there is not a limit on the wages. If a member turns age 70 while they are working, they can start receiving a monthly benefit and not terminate their employment. The employer will continue to withhold Eifers from their pay, and when the member terminates employment, Eifers will do a recalculation of their retirement benefits. There are special rules for part-time elected officials. If a part-time elected official also holds another Eifers-covered position with another entity, they may retire from that position and retain the part-time elected official position by writing a letter to the employer and put a copy in their application that says they no longer want Eifers coverage as the elected official effective with the date of retirement. If no Eifers is withheld from the part-time elected official position, they can retain that position and not violate their bona fide period. We also have a governor's proclamation affecting healthcare professionals and law enforcement regarding the shortened BFR, or bona fide retirement period, and the earnings limit that is set to end October 18th. So if you have anybody that has previously retired and you need them to come back during their bona fide period based on the proclamation, then they should not violate anything. If you have any questions about this, though, don't hesitate to call our office at the 877-473-7799. Okay, section 4, page 27, Eiffer's covered wages. Covered wages includes any pay for time worked to an Eiffer's covered employee. For most Eiffer's members, covered wages include regular compensation for time worked, such as an hourly or a salary amount received, overtime that is paid, and there is no limit on the amount of overtime a person can receive. If the employee can convert their overtime into comp time can be used in two ways. If the comp time is taken as days off, it is covered for Eiffer's and there is no limit on the number of days that can be used. If it is paid in a lump sum to the employee because they are not able to take the time off, it can only be covered for up to 240 hours per year. So it is at the employer's discretion, whether that is fiscal year or calendar year. For example, if a member has 500 hours of comp time and they take enough days off to equal 200 hours, but still have 300 hours of comp time to be paid out, the employer would pay out the entire amount, but only 240 hours of that time can be Eiffer's covered. Also, if you are an employer that maybe has a cap on your comp time, and let's say every time they hit 40 hours, you pay that out, you definitely want to watch it, because if you get to the 240 hours in a calendar year, then you can't cover anything beyond that. Longevity can also be additional amounts per hour or a lump sum payment. As long as it is categorized as longevity, it is covered for Eiffer's. Vacation, sick leave, paid time off. They are used to replace a normal work day during a normal work week. They are covered for Eiffer's. An employee must use the days in order for the days to be covered for Eiffer's. Back pay, when calculated as the exact wages an employee should have been paid, but not when paid as a lump sum with no regard to actual wages. Usually this happens when raises are not issued in a timely manner or timesheets are not turned in correctly. It can also be part of a legal settlement, which we will get into in a little bit more detail when we discuss conditionally covered wages. Hospital RVU is pay that is issued to doctors and includes a formula based on patients seen. Not many hospitals have RVU pay, so if you have questions, please call our office. Cafeteria plans that have a cash option can be covered if there is a qualified Section 125 plan in place. This must be uniformly available to all participants of a group, so you can have more than one group, but you cannot have a group of one. If you have a qualified Section 125 plan with a cash option, it is covered for everyone, even if they do not receive the cash. This must be added to the employee's Eiffer's covered wages as a payment in kind, with no other deductions such as state and federal taxes or Social Security or Medicare. Please send us a copy of your Section 125 plan for verification of coverage. These plans must be certified each year. Other covered wages includes the amounts deducted at the member's discretion, such as deferred comp, dependent care, and garnishments, and these are always included in the member's gross wages. Non-covered wages include severance pay, which is pay offered to someone that has been terminated as part of the incentive to leave employment. Retirement incentives, which can be paid as a lump sum or installments, but either way are not covered. All bonuses, which can include a hiring bonus, good job bonus, or a retention bonus. Allowances, which include car, phone, or clothing allowances. And stipends, such as vehicles, mileage, and health insurance. And anything that a person would have to substantiate with a receipt, which again can include mileage or meals, supplies, and lodging. Workers' compensation is always excluded from coverage regardless of where the money comes from. Employees should keep a check issued based on workers' comp, but if the employer wants to supplement the difference between the employee's normal check and workers' comp with vacation or sick leave, the small supplemental would be Eiffer's covered. The employee should never sign the workers' comp check over to the employer. Lump sum payments of vacation, sick leave, and PTO time upon retirement or in addition to regular pay or buyouts of vacation, sick leave, and PTO time should never be covered. Some conditionally covered wages, administrative leave. If someone is placed on administrative leave, it is covered as long as the person is still considered an employee. For example, if a deputy is involved in a shooting, the officer is placed on administrative leave while the situation is investigated. If they are being paid and considered an employee, all wages would then be covered for Eifers. If they are terminated, then any pay beyond that time frame that they were on leave or actual time worked would be excluded. Legal settlements can be covered if the employee is reinstated to their position and issued all their back wages, even if the employee does not actually return to work. It would be covered, and you would need to complete wage adjustments to move it back to the month it should have been paid in. If the settlement is a lump sum, then it is not covered for Eifers. Please send us a copy of the settlement agreement for verification of coverage. Disability payments are covered if paid by the assets of the employer and not covered if paid by a third-party company. If the disability payments are supplemented with vacation or sick leave, these small amounts would then be Eifers covered. There is a chart on pages 35 and 36 that has Eifers covered wages and compensation at a glance. Are there any questions about coverage of wages? Okay, so for our first question, with longevity, if it was a one-time thing like employees that are at the top of the wage scale received a longevity payment of $500 instead of an increase in wages, that would still be Eifers covered, right? I had someone from Eiffer tell me that it would be considered non-covered wages. Okay, so this is a little bit of a different situation. So longevity is going to be something that's offered usually on a yearly basis. If you have a one-time payment where it's based on their scales, you know, they can't get a wage increase because they've met the top of their pay scale, then that would actually be considered a bonus, and what you got told was correct. That is not covered wages in our eyes. So basically longevity is a lot of times it's based on continuous increases. So like you may get a pay this year, and then next year that would be calculated in with your normal increase in wages. So anything that is paid at the top of your wage scale is going to be excluded. Is there going to be a recorded version of this available to view again? I am alone in the office and have so many interruptions that I feel like I'm missing out. Well, we are trying to get this recorded. We do have it recorded currently, so we are hoping that, yes, we can get that out on the website with the recorded versions. That's the plan anyway. Okay, no other questions? Okay, so moving on to section 5, page 37. Contributions and occupation codes. Iowa law mandates that employees and employers contribute to Eifers. It is these contributions and the investment earnings that fund the many different benefits paid out to Eifers members and their beneficiaries. It is your organization's responsibility to collect contributions from the members and to remit both employer and member contributions to Eifers each month. Contributions are pre-tax for both state and federal income tax. So if you are looking at your W-2s, the gross wages are typically in box 3. This is then subject to the FICA percentage and the Eifers percentage. You would then subtract out the employee's portion of Eifers contributions and any other pre-tax money coming out of the employee's check, and the differences would go in box 1 and 16 of the federal and state taxable amount. You may list the employee's portion of Eifers in box 14. This is optional and not a requirement. However, most people like to see this amount. You should also mark the retirement plan in box 13 so that IRS knows you are participating in the qualified retirement plan. Coverage ceiling for 2020 is $285,000. Any annual wages that exceeds this amount is not subject to Eifers. So if your wages fall short of this amount, a pay raise may be in order. So definitely check into that. Regular rates are currently 6.29% and 9.44%. And it includes occupation codes 01, 17, and 19. Protection rates are 6.41% and 9.61% with occupation codes 18, 20, 21, and 22. And sheriff rates are 9.26% each for the employee and employer with the occupation code of 03. A list of all codes are on pages 41 and 42. Any questions about contributions and occupation codes? Moving on to section 6. Page 43, reporting of wages. Eifers wants you to submit wages to us based on when the wages are paid to the employee and not when they are earned, which is based on when the employee physically has that check in their hand. For example, if an employee works March 15th through the 30th, but the wages are paid on April 5th, these wages should be reported in the April wage report that is due to Eiffer by May 15th. The wages reported to Eiffer should be the gross wages before taxes are withheld, and not the net wages or just the contribution amounts. Wage reports and payments are due to Eiffer by the 15th of the month for the previous month's liability. If payments and wage reports are not reported or received to Eiffer by the 15th of the month following the previous month's liability, then late fees and interest charges are applied to the employer's account. The interest is a minimum of $20 for late contributions of $1 or more, and the late payment fee is a minimum of $20 plus 25 cents for each person on the previous month's report. Sometimes employers have rounding issues based on the types of software the employer used compared to Eiffer software. Please watch your accounts for outstanding debits and credits so as not to receive any late interest charges. And just as a reminder, if you are mailing in paper checks, be sure to include the remittance coupon with your check so it does not accidentally get applied to the wrong employer account. This can also lead to unwanted interest charges. If for some uncontrolled circumstance you cannot report your wages in a timely manner, or you have been charged fees for late reports and contributions, there are two forms that can be useful: the request for waiver of late fee/interest charges and the request for extension. The request for extension must be filed and approved before the due date of your report and/or contributions are due. The accounting department will be the ones to approve and write off fees or extend due dates. Termination dates and last check dates can be added to the system when submitting your wage report. It is always best to wait to report the dates when the person is getting their last check. You can also submit the dates through View Update Member Information. Once you have the dates in there, the member may take a refund with no additional paperwork needed by the employer. If the member returns to work, you must create a new employment record with a brand new start date. If you get errors that say employment records cannot overlap, or you need a first date of employment, either the previous employment did not get termed out or the new record is pulling the old start date. If you have completed the employer verification of termination form for a retiree, please keep a copy just in case anything should happen to change and you need to update the form. This year with COVID, we have learned not everything is controllable. If you are currently reporting your wages by manually entering in the amounts for each person and want to switch to importing wages, Eiffer's online reporting requirements are listed on pages 46 through 48. Sometimes wage reporting errors happen and wage adjustments need to be completed. Usually it is to fix misreported wages, wrong social security numbers, and wrong occupation codes. Anytime an employer is completing a wage adjustment to add wages to a member's account, it creates a debit on the employer's account. Eiffer also sends the member a notification of contributions due letter. The employer should withhold these additional contributions from the member's check as additional pre-tax dollars. If, however, the member pays by check, they will need to keep the letter and canceled check for their records. These monies will show as taxable dollars at retirement. So to avoid being taxed twice, the member will need to have this documentation for their tax preparer. If the member does not owe any money, we can pull the letters if requested by the employer. If the wage adjustment is for multiple months or years, the employer may work with the member to collect these contributions over a period of time so it does not cause any hardship for that employee. But the employer must still pay all contributions plus interest to Eiffer by the 15th of the following month the wage adjustment was completed, or additional interest charges will be added. The employer is always responsible for the interest applied. If it is a wage adjustment that is removing wages from an employee, this will show as a credit on the employer's account. The employer should then refund the contributions to the member, and the employer can request a check from Eiffer for the credit or use the credit towards their next month's remittance. Remember to tax the refund for state and federal income tax because it was originally withheld pre-taxed. You also will need to adjust the current W-2 or issue a W-2 for the current year, but no past W-2s need to be fixed. If it is a less than 6-month employee, so let's say they were hired as a permanent employee and then terminated at least 2 days prior to their 6-month anniversary, termination dates must be listed on the employee record before we will process the wage adjustment. These type of wage adjustments cannot be done if the employee started as a temporary employee, qualified for coverage, and then quit less than 6 months into coverage. These employees are only eligible for a refund from Eiffer's. If it is a wrong Social Security number or occupation code, the wage adjustment should have one line to remove the wages from the bad number and one to put on the good number, and the wages will zero out. Do not do separate adjustments for these types of fixes. They should be on the same wage adjustment form. If the occupation codes have different contribution rates attached to them, this could result in a debit or credit and additional interest owed. Every month on the 1st, under the Documents tab in IQ, there is a monthly statement available that shows all the transactions for the previous month. It has the beginning balance, transaction lines, which includes the report, wage report that came in, the contribution payments, wage adjustments that have been submitted, and any late fees or interest that has been applied. And then it will show the ending balance. If this ending balance is a debit, it will need to be paid by the 15th of that same month. If you have done a wage adjustment, there will also be a wage adjustment detailed report that lists all employees adjusted for each month with the contributions for the employer, employee, and any interest that may be due. There is also an annual statement listed in August of each year. This is useful to your auditors since it shows all transactions for the previous fiscal year, and it also lists your GASB numbers. GASB has to do with the unfunded liability that's within our system and what you would have to put on your financial reports. This year, the annual statement was generated on August 10th. Another report available for your records is the wage and contribution report that lists all employees with the wages and contributions for each employee. This is available in Account Summary, Wage Report, and Payment History area. You would click on the report so that it's highlighted, then click on Tools in the first column. You will get a drop down, and then click on Reports and Wage and Contribution Report. You may then print or save to your files. Frisco will walk you through this process when going through IQ after the break. When making an EFT payment, be sure to click on Confirm and Print to print a copy of your transaction. If you don't print this copy when making your payment, you will then need to go through Payment History and try to print a copy from that page. It is not as clean looking as the confirmation print, and Frisco will also walk through this process during the IQ demonstration. Are there any questions on reporting wages? So if a wage adjustment was filed to add wages to an employee for the previous year, do I need to do a revised W-2 for that employee? So we know that when we return contributions, you don't have to do previous revisions of W-2s, but I'm not sure about when we add wages. I don't think we have to, because I think you can take it out as additional contributions and just add it to your current W-2 as additional pre-tax contributions. But you would probably want to talk to a tax preparer just to be sure. Any other questions? So moving on to Section 8, page 57, Eiffer's compliance reviews. And I know we've always had a discussion about whether we are called compliance reviews or an audit, but technically it's just a review of your information. It's more of an educational type thing rather than an audit. We don't look through every single thing that you have like a state auditor would. Eiffer conducts compliance reviews with each employer approximately every 3 years. So we currently have 5 senior retirement compliance officers that perform reviews, and this is our way to touch base and to make sure everyone is being covered for Eiffer correctly, the correct amounts of compensation are being covered, and you are not having any problems reporting wages or with IQ. We normally send a letter requesting the gross wages for each employee for each quarter of the year we are reviewing. We want gross wages for each person, even if they are not covered for Eiffer's. This report, preferably in an Excel spreadsheet, should include the Social Security number, last name, first name, and each quarter's wages for that calendar year. These can be sent securely as an attachment to an email we have sent you, and you have replied to, or you can send it through the message center in IQ. Frisco will show you how to do this before we take a break. Once we receive the information and do a comparison to what has been reported to Eiffer's, we will set up a meeting with you. Normally this is in person, but this has not been a normal year, and we are currently doing all reviews by phone. While doing the compliance review, we will look at all of your optional coverage forms, the reasons for the differences on the payroll comparison spreadsheet, and go over a booklet. We also look at W-2s, 1099s, special occupation employees, retirees, and any documentation that may be related to payroll and compensation, such as health insurance with cash options and other lump sum payments. Once the review is complete, we will send you a results letter with the findings listed, and you have 30 to 60 days to complete any additional information and return to Eiffers. So I had an employee that was originally hired as a temporary but is now a regular employee. What do I need to do to start benefits? Okay, so you don't have to go back and pick up the temporary employment, but if they switch during that time frame, and you would just then add them at the point that they became a regular employee to your payroll report. Once we get wages reported, then we will send them information on how to log into the My Account. You don't even have to give them a beneficiary form anymore. Just report their wages to us, and then we'll send that documentation out to them about how they can do their beneficiary form or log into My Account and do it through there. Section 9, page 59, Eiffer's forms. All Eiffer's forms are found on Eiffer's main website under members, retirees, or employers. You will also find the member handbook, which was just updated last month, along with the most current IQ help guide. And all of our brochures are listed under the About Eiffer's tab and publications. There is a lot of good information on our website, and all employees should be encouraged to log into My Account to update beneficiary information, change addresses, and create estimates for retirement. So if they have not signed up to, log into the My Account, they definitely need to give us a call, or if you have not done that, give us a call and we'll get your account set up for you. Are there any additional questions? Well, Frisco is going to walk you through how to send a message and attach documents through the Message Center in IQ. We will then take a 15-minute break, and when we come back, Frisco will walk through IQ. If you do not want to join us for the IQ portion, be sure to complete the survey that will be sent to you, and thank you so much for joining us today for training. I really miss doing it in person because I really like to look at each of your faces. So anyway, hopefully next time we can do that.
Okay, wonderful. Thank you, Danny.
Oh, you got a question?
All right. Let's bring that up.
Going back, you mentioned certifying the 125 plan each year. Nothing has changed for our county, but how do you want us to do that? Okay, so out on the main website under employer forms, there is a section 125 certification. So if we've looked at your plan once and we've determined what should be covered and nothing has changed, we still want by the end of December each year for you to send in that signed copy of that section 125 certification to certify for the following calendar year. So that way we just know that you're certifying that every year, that everything is the same. If anything has changed, then you definitely want to send us either the new format of how you're doing it, or talk to us so that we can look over that documentation just to make sure that the correct amounts are being covered for Eifers.
Actually, we got one more question coming in, and then I'm going to get started on the Message Center.
Okay, so can we explain the FMLA leaves? So anybody who is on an unpaid leave for FMLA, so if they are off at least 1 quarter or more with no wages whatsoever, all they have to do is send us in the proper documentation that shows that that was an approved FMLA leave with no pay, and we will give them 1 service credit free. Anything beyond that, then they'd have to purchase that. Now, a lot of times what happens with FMLA is they either have enough sick leave or vacation to cover that. If they're not going to go at least 1 quarter with no wages, then there's nothing that they need to complete. It's only those that are being unpaid that we want additional information for. Is the comp time maximum 240 different for any working class such as deputy sheriffs? Nope, it's all the same. So it doesn't matter what your occupation code is or what your classification is. It's 240 hours for everybody. Does that have to come from the employee on the FMLA? Yes, it does. So it is the employee's responsibility to send that information to us if they want to have that credit. So it's not the employer's responsibility, although they would get that documentation from you.